Hims and Hers released their earnings from the third quarter of 2024 about 30 minutes ago as I'm recording. So I'm going to give my initial thoughts. The conference call is just starting as I'm recording right now, but the results I think were just really phenomenal. This continues to be a company that I think can grow for a long time in the foreseeable future just because it's a platform company. A lot of the attention the market has been given is on GLP-1s. They talked about that a lot, and I'm sure we'll get more details in the conference call. I'll be back to cover that over the next couple of days. But the growth is just phenomenal. I'm going to show this chart. Robinhood grew revenue 77% in the third quarter to $401.6 million. The compound annual growth rate since the end of 2019 is an incredible 79.7%. Just phenomenal numbers from a company that's now reaching scale, starting to do much more vertical integration. They own their own pharmacies now. They're able to do compounding themselves, able to offer more custom treatments. So I'm going to dig through the results and give my initial thoughts. I think a lot of positives going on here. We're going to see more details on what the future of GLP-1s are, but I think management is much more bullish on this than the market is. That is really the reason the stock has been so volatile over the past few weeks. But just look at these numbers and the numbers that they're saying that they're growing without GLP-1s. I think this is a phenomenal growth story for the next 10 to 15 years. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Don't forget to subscribe here on YouTube and check out my newsletter, Asymmetric Investing. There's a link on the screen and also a link in the show notes as well. I'll be back in just a second with my look at the results. Heads up, folks, interest rates are falling, but you can lock in a 6% or higher yield with a bond account from public.com today. And this is a pretty big deal because when interest rates drop, so can the interest you earn on your investments. A bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds. And you can see on the screen an example of what this looks like. The great thing is you know exactly what you're buying. So while other people are out there watching their returns shrink, you can sit back with a regular interest payment, but you might want to act fast because your yield's not locked in until you invest. The good news is it only takes a couple of minutes to sign up at public.com, lock in a 6% or higher yield with a bond account only at public.com/ASYM. Here's the high level numbers, 77% growth. Like I mentioned earlier, $401.6 million in revenue. That's up from $226.7 a year ago. So just incredible growth. Net income, $75.6 million. When I started following Hims and Hers, one of the questions was, is this a company that's on a customer acquisition treadmill? Meaning they're acquiring customers through places like social media, through a lot of their advertising. That's how they gain exposure for their platform, for their different products. But if you need to keep acquiring those customers because they churn really regularly, then you're on a treadmill. You just keep trying to acquire new customers and acquire new customers. You never end up getting to profitability. Now, if you build a long-term relationship with those customers and there's a high margin product that you're selling, that can actually be very profitable. But the question is, which side was the company in? Now we've seen net income, $75.6 million. They are clearly generating a lot of value. Adjusted EBITDA up 317% from a year ago to $51.1 million. Operating cash flow and free cash flow also up massively over the past year. The subscriber numbers, what I want to see is, are the subscriber numbers increasing? I'm a little bit less concerned about is the revenue per subscriber increasing. I don't necessarily want to see that push too high because you don't want to price people out of the market. Part of the point of Hims and Hers is that it's a relatively low cost solution. So 24% growth on revenue per subscriber is good. They're moving to more customized treatments, but the 44% increase in the number of subscribers, and they gave a stat later, I believe it was 40% increase even outside of the GLP-1 business. So take out GLP-1s, and this is still a massive growth business. That is just phenomenally bullish for Hims and Hers investors. This is something they often talk about as well, compounding or the personalization. There's a number of different ways that they can do this, but compounding is one piece of it. But over half of their customers are now using a personalized product. Again, that is going to increase customer satisfaction. It's going to make this relationship stickier with customers. So I think this has been a really phenomenal move for them. And then future innovations and investments focus on what they say is 4 different areas. So everything that you hear about this company should focus on these things. Personalized products across newer specialties. So adding specialties to these personalizations. Look for that in the future. Compounded semaglutides was part of that. They have another GLP-1 that's going to be coming to the market in 2025. Expanding the selection of multi-condition treatments. So they've given a bunch of examples of that, but ED and hair loss would be an example. So can you do one treatment that treats both of those things? Again, positive for the user, not something that a traditional doctor-pharmacy relationship is going to give you. So gives hims and hers an advantage in the market, increasing the availability of different form factors. If you're somebody like me and you don't like taking pills of any size, this can be phenomenal. Serum, spray, gummies coming soon. Yes, sign me up. Anything. I would much rather have a gummy than have to swallow a pill. So this is, again, going to be a huge win because they're going to know what customers want. Are you somebody who doesn't want to do an injection? They don't want to swallow pills. Maybe a chewable or a gummy is going to be good for you. Maybe you're not bothered by any of those things and you can just go with one of the other treatments that's lower cost. Lots of different options when you know more about your users and you have more capability to produce the products that they need. And then mass market pricing. As the company gets bigger, they will have more pricing power. This is a virtuous cycle and it's just getting started for hims and hers. This is one thing I did want to cover is what they talk about is the efficiency that allows them to democratize access to high quality care. This is one of the things I think a number of companies that I cover here on Asymmetric Investing talk about is let's take the products that were traditionally only available to the high end of consumers and give them to more people. So things like compounding, that's traditionally not been available to most people. Hims and Hers is a company that's making this more available to a wider audience. So they're able to serve low income areas better. Think about that with the GLP-1 products. This is a product that's thousands of dollars. Now they're bringing that down to hundreds of dollars. Individuals over 65, special access groups. If you're able to bring lower cost products to market and reach people with just an internet connection and actually mail them products to their door, you reduce the friction in the market. You reduce that friction for going to the doctor. Maybe there's a doctor's visit, a copay, or some sort of fee that you have to pay there. You reduce the friction of going to the pharmacy. Nobody likes going to the pharmacy. Also, when you have no idea what something is going to cost at the pharmacy, that can be a stress point right there. So this is where democratizing the solutions is a really good thing for a company like Hims and Hers. And this shouldn't be overlooked by investors because this is how disruption works. You look at this and you go, yeah, but they're just offering some simple products, some ED, some hair loss solutions. But what happens when that moves into other parts of the market? What happens when most of your medical needs can be filled by a company like Hims and Hers? That's going to be a huge advantage in a much, much bigger market than where they're in today. They had a pretty big section and discussion about weight loss. And this is meant for GLP-1s. I'm sure they're going to talk about this a lot on the conference call. But the thing that I want to take away here is they have the ability to do different form factors, the customization that we talked about earlier. Generics are going to become available. So this is liraglutide. This is going to be available in 2025. So that's going to maybe bring a little bit more stability to the GLP-1 market for Hims and Hers. And then branded medications. So the discussion has been, are these branded medications going to come off of shortage, and that will limit the ability for Hims and Hers to be able to sell compounded versions. Semaglutide is the one that they sell right now, but there's a couple that they could potentially sell. And they said that, hey, if they do, we are happy to sell Wegovy and Mounjaro and Zepbound. We're happy to sell all of these. It's going to be a much higher price point than we can do from a compounded perspective. But if that's the only option available to us, yeah, we'll definitely do that. So I think everything is heading in the right direction. And these outlook numbers are just astounding for Hims and Hers. Q4, remember we're going from $401 million in revenue. They're expecting $465 to $470 million in revenue. Year over year growth, 89 to 91%. That is insane growth. Adjusted EBITDA, $50 to $55 million, 11 to 12% growth. And for the full year, $1.46 to $1.465 billion. 67 to 68% growth on the top line. Long-term retention rate, 85%. Like I said, are they on a customer acquisition treadmill? If this was 50%, they absolutely would be. But 85%, that is a really good number. Expanding the portfolio, improving unit economics to payback periods that are under a year. And then there's going to be marketing efficiencies with the business model. So I think everything is pointing in the right direction for Hims and Hers. A couple other charts to just look at the growth trends. This is the subscribers. Single 30-day subscribers is in blue. Multi 30-day subscribers is in this teal color. So you can see that they're trending much more towards these long-term solutions. So 90-day solutions, if you will. Revenue growth, just a tremendous rate of revenue growth in this revenue per subscribers increase. That's likely because of GLP-1s, but we'll see what the details of that number are. Margin profiles, margins coming down a little bit, but if you're going to have 80, 90% growth, I'm okay with margins only being 79%. And operating expenses as a percentage of revenue are coming down. Again, this marketing number is going to be the biggest one. If this keeps coming down, the profitability is going to shoot up for Hims and Hers. That's the upside, is that you build this long-term relationship and then you can add products to your product portfolio. You don't have to reacquire that customer. You already have that relationship with them. So if this marketing number continues to come down, they're able to leverage their general administrative, their technology costs. All of these things would be phenomenal for Hims and Hers bottom line. And that's exactly what you see here. This is net income going from a loss to just a phenomenal gain. This is why I'm so bullish on the companies. I think the operating leverage opportunity for Hims and Hers is just phenomenal. So I thought this was a phenomenal quarter from Hims and Hers. As I'm recording, shares are up about 7% after hours, but they've been kind of all over the place. Shares have been as high as about $25 per share over the past year. So we'll see what happens over the next few weeks. But I think the results are moving in the right direction. I think they're trying to answer investors' questions about GLP-1s. That's going to be a volatile segment. But again, think about this as a platform company, a company that's building a long-term relationship with its customers and is providing a better alternative to the doctor-pharmacy relationship than most people have today. I think that's a huge win and a massive growth potential. But let me know what you think about the results in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.